All right, welcome in. Happy Tuesday. This is the Cow Guy Close, and I'm Scott Shelly, also known as the Cow Guy. Thank you very much for joining us. All right. Is a $500 billion in market cap losing in one day a big deal? Well, how about a 13% sell-off? Is that a big deal? Now, if you haven't figured out what I'm talking about that AI stock, NVIDIA. It's actually more like a country now, having briefly eclipsed $3 trillion in market value. But after a brief sell-off, market participants started to worry and were a little concerned about some sort of contagion amongst other chip makers. And I say this, it's come really far, really fast, and that's been a good thing for some investors. But nothing really goes up in a straight line, especially when it comes to stocks. But there have also been a few things that I don't like. And one of the bigger ones is this 10-to-1 stock split they announced at the last earnings report. I think it takes advantage of the smaller investor. That's allowed the stock to trade a little higher just due to simple affordability, really not because the stock's been any good, but just affordability. Now, my next guest, he handles things like this for his customers and their retirement accounts as well. I'd just like to hear his stance on AI and NVIDIA and these nefarious stock splits I referred to. Please welcome into the show, Mr. Craig Bolanos. Craig, thanks for being on. Now, I haven't really gotten into the weeds with this NVIDIA. We talked about it right when it was exploding, but now it's really starting to affect a lot of things. For instance, a great example is, you see this artificial intelligence trade. It's spread out to more things than just NVIDIA. So that's got the S&P 500, which has got some more artificial intelligence stocks in it than the Dow doesn't really have any. And then you've got the NASDAQ that's also obviously a tech stock index. So you see those things kind of breaking away from each other now. A good example today, Dow being down roughly 400 and the NASDAQ up 100. So you kind of have to talk about it, right? So what are your thoughts? I mean, it's had a pretty volatile last few days, which has really kind of manifested itself in some of these indexes.
Well, I mean, you just said nefarious stock split. I mean, I haven't heard those words come together. Let's unpack that one in a minute. But yes, that 10-for-1 stock split was certainly a big news. And this company eclipsing the other mega cap stocks to be a $3 trillion company. Wow, that is news in and of itself. But Scott, AI is real. Artificial intelligence, the generative kind, is here to stay. And it's not just about NVIDIA, as you said, it's about everything. But if anyone wants to know who is the CEO that's a rock star, it is this guy, because he's responsible for almost 1/3 of the stock market's gains this year alone, when you really think about it, because what's synonymous with AI? It is NVIDIA. What used to be the home of professional gamers doing high-end gaming laptops. Holy cow, this has just turned into trickle-down economics throughout the entire system. But what do I say? I think it's ready for a pause. I think the pause has already occurred. But I think if anybody wants to get in because they got a bit of FOMO, cheaper prices are coming, and you should be ready to buy the dips and then sell an eventual rip higher.
Yeah, and that's why I wanted to talk to you about it, because it's done so much work so fast. Nothing can really, well, maybe something can. I mean, ever since the pandemic, things have really started to turn on their heads. I mean, we had minus $45 a barrel oil. All right, if we can have minus $45 a barrel oil, where you get paid to buy it, then anything can happen. But this is one of those things that I served on I was the chief operating officer of a technology company in London. And being a technology company, I was really at the forefront of seeing what technology could do, even though this is 15, 20 years ago. And I really do appreciate what NVIDIA can do. But I also am a little loath to pile all my money in on these market highs, especially when it splits. Now, so everybody knows, we talked about it on my show with Adam Johnson when it was $150 a share, then $350, then $700, then $950, and then it got over $1,000. When it got over $1,000, they split 10-to-1. So that means if you had one share at $1,000 a share, you got 10 for $100 a share, right? And what that does is that now it's affordable to more smaller investors, and so they want to get in on the game, and so they buy a couple of shares, whatever it is, and they drive it up to say $120 a share, which doesn't seem like that big of a deal. But that means it's taken itself in the old valuation from $1,000 a share to up to $1,200 a share. And I think, Craig, if I'm not mistaken, it made it up to $140 a share, which is $1,400 in the old valuation, correct?
No, that's exactly right. And and you're right. Stock splits intrinsically do not change value, but stock splits for all intents and purposes do create and make things more accessible. Although I would argue accessibility is not nearly as important as it once was, now that everyone has the ability to trade fractional shares when needed, albeit at a cost, right, Scott?
Right.
But let's be sincere as we take a look at the picture for NVIDIA. I mean, we talked before on your show, it's kind of like Field of Dreams. If you build it, they will come. I'm just waiting for the next round of earnings reports to come out. And if they can once again deliver, the AKA build it, you might see the rest of the market continue to come on board. But as you said, trees don't grow to the sky. And certainly looking at a stock chart that looks like a ballistic missile ever since the stock split
Right.
has everyone ripe to pause, because there's been evidence that stock splits sometimes can be good for accretive run-ups of maybe 4% in an underlying security, certainly not 27% like we saw at one point in NVIDIA stock price.
Yeah, I just wanted to make sure everybody's aware of it so they know what they're buying when they get into it. But I do believe, it may be running out of oxygen a little bit. Doesn't mean it's going to come off a big time, but maybe there's a little bit of a pause or a stall for a little bit of a time being. I really appreciate you coming on. I know you're kind of knee deep in it there, too, so you got a different point of view. Appreciate it. Thank you very much. Craig Bolanos, he's the CEO and co-founder of the Wealth Management Group up in Chicago.